Hello everyone and welcome back. In this video I want to talk about software companies, software stocks, because we are seeing an apocalypse. All the software stocks are going down, everything is red. You have a clear discrepancy between software companies and the market, and I want to talk about what is happening really, all the things that I will monitor for 2026 when it comes to monetization of AI, all the potential stocks that I want to buy, and the target prices, everything that you have to monitor for 2026. So maybe this is a bottom, and maybe these are golden opportunities, or maybe these are falling knives. So in this video, I will get you some information that will be valuable if you want to invest in software stocks. In case this is your first video from this channel, welcome. My name is Christophe Noor. I've been investing in the stock market for almost a decade now, and I have achieved a performance of 25% per year. And this is not the first time I am doing some due diligence on hated stocks, hated companies. I remember when everybody was hating on Mark Zuckerberg and Meta Platforms in 2022. And I bought the dip, and it turned out okay. Now Meta Platforms is just doubling, tripling since then. So, I mean, even more than this. The stock was down to $100. Now it's $600. Multiply my wealth by 6. So, yeah, sometimes hated stocks, hated industries will give you amazing opportunities. And now, as you can see from the great podcast, The Compound, you have a clear gap between semis and software. You have a ratio between two ETFs, and this ratio is just creating a gap between all the semiconductor companies: Nvidia, Lam Research, Micron, KLR Corp, ASML, Upland Materials, Tokyo Electron, all these things, SK Hynix, and the software companies. You have the most important gap since COVID between software and hardware. And you see, this is not the end of the world. Maybe it will come back. As you can see here, in the middle of 2024, you had a very clear gap between these two segments, these two industries. And guess what? It reverted back to the beginning of 2025. And then back up. We have a scenario where it's possible this ratio goes back down, because it's about trends after all. But for the moment, the stocks that benefited the most of outflows of money in 2025 are benefiting also in 2026. All the cheap stocks that went up a lot in 2025 are going up a lot also in 2026. But we are only a few weeks in 2026, so these are short-term moves, explosive moves on the upside for cheap companies, on the downside for software stocks. But as you probably know, now the world is moving faster than ever. This trend can collapse. This trend can revert back. And from what I am seeing, all the cheap companies are trading expensively right now. Very expensively. And all the software companies have come down in value. They were expensive, and now they are down to a fair valuation, and some of them are getting cheap. Eventually, you will have a reversion to the mean. Is the reversion happening right now? In 6 months? In 1 year? Nobody knows, but eventually it will happen, and eventually you will have winners. You just have to detect who will be the software companies that will win. Okay? So I have a couple of software companies here that are down a lot. Here is a great Twitter post from Sergey. Software stocks correction has been brutal. The drawdown from the 52-week highs. You have Figma minus 80%, Duolingo minus 70%, Monday, Team, ServiceNow, Oracle, Sentinel. You have plenty of companies, Datadog, Zscaler, Salesforce, Adobe. All the software companies are down a lot. Now I want to make a clear distinction between, out of all the software companies, some of them have a moat, some of them don't have a moat. Some of them are making money, some of them are not profitable. So I have a list here on my phone, plenty of companies that have a moat and profitable, but still they are getting some hate in the market. You have Salesforce Intuit, ServiceNow is also very promising. Constellation Software, that is getting some hate right now. I'm surprised Constellation Software is down so much, actually. Constellation Software, that is famous for buying other software companies. This company, this stock is experiencing the largest drawdown ever. The shareholders of this company were very proud of having never experienced a 30% drawdown. Well, it happened for the first time now. And as you can see here in red, these are all the drawdowns for the company. We are experiencing a 45% drawdown. The stock is down a lot, and the valuation is down a lot. The multiple for this company was expanding, had been expanding for a decade. And look at this. The price to free cash flow of this company went from 20 to 30 to 35. And it went from 35 to now 16, 17. All the multiple expansion evaporated in 1 year. And I see this phenomenon for many, many companies that are in this software industry. All the cybersecurity companies are dropping also. You can look at Zscaler. We have exactly the same thing. If you are a cybersecurity company and you are about software, well, you are down a lot. CrowdStrike, same thing. Down a lot. We are experiencing a pretty large drawdown for Zscaler actually. 35% down, 40% down. Okay? This is not the first time it happens for this company, but I see a lot of hate when all the results are fine, by the way. For the moment, all the software companies are in a good shape. I don't see declining businesses that are about to die. It's just that people have lost their trust for these businesses, and you have a lot of uncertainties. Okay? So I want to share with you some notes from Adam Khoo, and I have some comments to make. So here is a great Twitter post from Adam Khoo explaining the situation with the software stocks and whether it is a buying opportunity or not. The software sector is facing an apocalypse. Leaders like Salesforce, ServiceNow, Veeva Systems, and Constellation Software are down 40 to 50% from their highs over fears agentic AI will eat their lunch by automating the very tasks these platforms manage. However, history suggests that markets repeatedly declare industries dead, only to realize later that incumbent leaders are far more adaptive than expected. Now you have Claude that released a new model. You can create your own app, and people are extrapolating this growth in AI. Same thing is true for ChatGPT. Same thing is true for Gemini. People are seeing this exponential curve, and they think that everybody will be able to create their own software, their own app. You will be quite surprised to see how difficult it is to create a new Salesforce, your own Salesforce. If you have a problem, if you have a bug, you need to fix these issues. And for the moment, these LLMs are not good enough. People see this trend of LLMs, the growth we have, and they think the growth will continue in the future. So ServiceNow will become obsolete. Veeva System will become obsolete. Salesforce will become obsolete. This is the narrative we are seeing right now. These are the reasons these stocks are down. However, most people maybe overestimate this trend. Before selling in panic, remember times when the market predicted a Kodak moment and was wrong. Adam Khoo is an experienced investor, a well-seasoned investor that has lived through many cycles, and he is giving us examples when the exact same scenario happened, and guess what? These industries were not dead. First example, the death of retail 2015-2016. Investors feared Amazon would make physical stores obsolete. Instead, leaders like Walmart and Target integrated the threat using stores as edge warehouses for same-day pickup. Both eventually hit all-time highs. If you look at the stock price of Walmart all-time highs. Valuation is really high. People are very optimistic when it comes to Walmart and their future prospects. Second example, the cloud versus on-premise crisis in 2010, 2012. Markets assumed legacy giants like Microsoft and Adobe were finished when AWS from Amazon took off. They pivoted to SaaS, software as a service models, and captured the majority of the cloud's value, becoming the best performing stocks of the decade. Why agentic AI is a catalyst, not a killer for SaaS leaders. This is a point that also other quality firms are sharing. And I am reading a lot of quarterly letters from quality funds that are invested in these software companies. You will have software companies that will die because they will become a commodity. And you will find some other software companies that will implement AI and will actually be much more efficient thanks to AI. So for some companies, AI will be a catalyst for growth, reacceleration of revenue, and lower costs, so better margins. The market currently overestimates the speed of disruption and underestimates incumbent adaptation. I highly recommend you read the letters from Acre Capital Management. They have a whole letter based on this sentence, if you're interested in reading on the topic. By the way, if you want to become a better investor and improve your performance, I have a coaching program. It gives you the exact method I've used to generate 25% per year for almost a decade. More on that at the end of the video. SaaS giants are already pivoting away from human seat licenses to outcome-based pricing. Software leaders are adapting and integrating agentic AI into their revenue models. They are moving away from per-seat pricing to capture the value of automated digital labor. Here are some examples. I mean, you can look at the red graphs I showed you before with all the stocks that went down. You download this image and you ask ChatGPT or Gemini for all these software companies, how are they monetizing AI? Do they monetize AI? And what are they doing? And Gemini will tell you all the solutions that these companies are doing right now. All the things that they are implementing right away. Okay? Please use Gemini and ChatGPT for your research. I am using Gemini a couple of hours per day, every day. And it saves me so much time. So many hours of work. So you can just put all the list of all the software companies actually and ask Gemini, how do they implement AI? Is this working or not? Is this too early to judge? What are they doing? And you will find beautiful answers. Here are some examples. For Salesforce, they introduced the Agentforce with Flex Credit model. Instead of just seats, they charge roughly 10 cents per action. If an AI agent does 5 times the work of a human, revenue can actually double per unit of work. So every time you want to make a change, if you are using an AI model, you have to pay a credit. The same thing is true for Adobe. Now Adobe has implemented a new AI monetization system with credits. Every time you want to create an image thanks to AI, you consume 1 credit. And this credit thing has been here for 1.5 years, and they recently made a change to increase the price actually, to make people pay more. So in the past, you had like thousands of credits for free. Now you have to pay, okay? So you had different tier of different licenses, different subscriptions, and people want their credits because now it's been 1.5 years and people are used to using a lot of credits. They want implementation of these credits, and now they will have to pay. This is a clear monetization system, how you can make revenue with fat margins thanks to AI. Credits. Salesforce is doing exactly the same thing. Another example is ServiceNow, using a Pro Plus SKU with 30% premium to unlock Now Assist. Basically, ServiceNow just issued a new pricing model, a new subscription model, way more expensive, but with AI integration. guess what? If you want to use AI and ServiceNow, you pay up because of productivity gains. It's still worth it to pay up because of all the productivity gains you will have. They are betting on agentic fabric where AI agents talk to each other across departments, a complex workflow startups can't easily replicate. And also, good luck creating this new app yourself for all the people that want to create their own app thanks to Claude, thanks to Gemini. Good luck creating all the architecture they have for Salesforce, Adobe, or ServiceNow. It will be very hard right now to have all this complexity, all the workflows at the same place. If there is a bug, you have to do it in-house, or you can just continue to use Salesforce or ServiceNow. So actually, they are starting to monetize AI. And for Salesforce, the revenue has decelerated. I know what the bears will say. I understand how people have a lot of uncertainties. In the past, Salesforce was growing 20% per year. And since 2022, the revenue has decelerated from 20% per year to 15% per year to 8% per year. And maybe with this AI monetization, the revenue will reaccelerate. This is the plan, and this is the most important thing to monitor for 2026. For the next earnings report, you want to see clear plans of reacceleration. The same thing is true for Adobe. Disclaimer, I'm a shareholder of Adobe. That's roughly 9 or 10% of my portfolio. And you look at the growth rate of Adobe. Before, Adobe was growing revenue at 20% per year. And since 2022, we are growing 10% per year. Still decent, right? You are still growing 10% per year, but people want more. People see the threat of AI, and people doubt that the growth will come back again. So in 2026, the most important thing you want to monitor for these software companies is how much of an implementation they are doing with AI. How good do they monetize AI? And will you really reaccelerate your revenue? Maybe there is a scenario where they succeed. So they implement AI, they monetize AI, and the revenue growth rate goes from 10% to 12, 13%. If you have a growth rate that picks up again, you will see the multiple that will double. It will be extremely bullish for all these stocks. You only need a little push, and all these stocks will thrive. And people will say that it was an easy buy, okay, as always. So you have companies that are implementing AI. They are not waiting to be killed, right? They are not waiting to be disrupted by AI. Bottom line from Adam Koo, markets systematically underestimate switching costs and regulatory friction. If you've been working with Salesforce for 20 years, you have all your data, all your framework, all your workflows in Salesforce. Will you really change? Even if you use AI right now, it's too early to tell. It's a big question mark. This is why you have so much uncertainty when it comes to software companies right now. While the software apocalypse narrative is loud, the SaaS pivot to AI agents may actually make these platforms more indispensable and more profitable, because this credit thing is almost pure profit. You will have fat margins if they succeed. If you look at Adobe and their gross margins, any margins will do the work. Gross margins, operating margins, we are talking about a very profitable business model, gross margins of 90%. If they succeed with their credits, the margins will go up immensely. The same thing is true for EBIT margins, operating margins. We are talking about a business model that went from an operating margin of 20% to 25% to 30% to 35%. If they succeed, the margins will skyrocket because credits are almost pure profit. Okay? And now this is not happening because you have flows of money. Capital flowing out of software stocks because of all the uncertainty and flowing into hardware. This is Wall Street. You know what happens with Wall Street? They change their mind every month. So it can go really fast and the reversal can happen in 1 month. If now we are entering the earnings season. If all these software stocks are all saying the same things, all the software companies are saying, okay, reacceleration of revenue, in 3 months, they can go back up easily. Easily, they can shock the world. And the opposite scenario is true. On a negative scenario, maybe this is earnings season and everything is decelerating again. Oh boy, they will just crash a lot. So I'm not guaranteeing they will rebound. Maybe they will all die. It's a scenario after all. It's possible. This is why Adobe is not 50% of my portfolio. Okay? It's only 9-10% of my portfolio. If I'm wrong, I may lose half of the position, so I lose 5% of my portfolio. But if I'm right, I make 20% per year. This is an odd I like. It is a risk reward I like. So I know some people that have 2% ownership in Adobe, or 10%, 15%, 20% of their portfolio in Adobe. Depending on your conviction, you can build up the position or not. Same thing is true for Intuit. Same thing is true for Salesforce. Same thing is true for all these companies. Okay, Intuit, same thing. The company is in a large drawdown right now. You look at the stock price down 30%. All the software companies are down. I have a couple of comments I want to make, and I want to show you another tweet that will give you another information. Deceleration of growth and just an early sign of AI monetization. Yeah, the reason why all these stocks are down is because the monetization of AI is very early. You look at all these companies. I mean, I've done some heavy research on Adobe, so I know they have created their AI Adobe called Firefly in 2023, but they did not monetize it in 2023. They waited 2024, and they finally monetized it in 2025. The same thing is true for Meta Platforms. I started this video by saying that I invested in the past in hated stocks. Meta Platforms was a hated company back in the days. And I remember very well when they started to copy TikTok and the short form video format, the Reels. So the first year of Reels, no ads. It was bad. And then you wait a couple of quarters and they slowly ramped up the monetization on Reels. So I'm a daily user of Reels. This is my generation. We are hooked. We are addicted to this. So as you scroll with short form videos, vertical videos, in the past you had 0 ads. And then I tracked this every day, so I know this quite well. You had 1 ad every 11 videos. I know this, I made this exercise every single day for weeks and weeks and weeks. So you had 1 ad every 11 videos and you scroll and you scroll and you scroll. You wait a couple of weeks and you had 1 ad every 7 videos now. So the frequency of ads just increased. And then you had 1 ad every 4 videos. And guess what? If I go to Instagram right now, if I go to Reels and I start scrolling, I will have 1 ad every 3 or 4 videos, 3 and 4 videos, and sometimes every 2 videos. So you have 2 videos, 1 ad, 2 videos, 1 ad. And sometimes you have 2 videos, 2 ads. 1 video, 1 ad. So it's like Facebook, it's like Twitter right now, it's like YouTube. So many ads. But you just have to wait. People judged Reels too fast. At the time, people were not big believers in Instagram and Reels, and how will you monetize this? You are just burning so much cash. TikTok is eating your lunch. People are in a hurry. Don't doubt Instagram. Don't doubt Mark Zuckerberg. If you are a user of Instagram, you know this because it was inside my circle of competence. I know this ecosystem really well. I'm a daily user. For these software companies, are you a user? Do you have friends, colleagues that are using these services? Do you know if you have churn? What is the customer churn rate? Are people leaving? Are people lazy and they just stay with the same platform? Do they build their own software with cloud co-work? Do they do it? You can just ask. You can go on YouTube, you can go on Twitter, you can go on any platform and do your own research to see if people are leaving the platform or not. And depending on the answers you will find, you will be able to make up your own mind. Out of the list of all the stocks that are down in the software companies, I will not invest in everything. I believe, for example, that some companies have a weaker moat compared to Salesforce, for example. Also, a company that we analyze inside my coaching program is Intuit. So tax report, accounting. I don't want to invest in Intuit because lack of growth. And I think the only way they can grow a lot is through acquisitions. And I don't like this. But in terms of moat and AI, pretty good. Pretty good. Intuit has a few platforms and they can implement AI everywhere. And people have been using their services for years and years and years. You have switching costs. What is the alternative? You build your own tax report in-house with your computer, with AI and cloud. I mean, will you really do this and trust your own AI to file your tax report, your complex tax report? Or will you trust Intuit that you've been using for 2 decades? I mean, for tax, something that needs some good due diligence, maybe you want to trust an entity focused on tax reports, tax filings. So maybe people will stick with Intuit because it's easy, it's simple, you pay and you get rid of it. Will you really make your own tax filing software? Depending, some people will argue yes, some people are too lazy and they will say no. I'm on the latter camp. I just don't want to do this, so I'm lazy, I can pay up for this, okay? But now we are seeing early signs of monetization, and this is the reason why all these software companies are down. The moment the monetization is ramping up, similarly to the scrolling ads, more ads, ramping up of monetization, every one ad every 7 videos, one ad every 4 videos, the moment we will see this moment for software companies, it will be too late. So if you want to buy software companies, you have to invest in them before this inflection point when everybody knows monetization is here. So, I just bought Adobe. So I think right now is a good moment for Adobe because Adobe is cheap. But for other companies, they are not cheap. Intuit is not cheap. You look at the price to free cash flow of Adobe, it should be around 13. What is the price to free cash flow for Intuit? The price to free cash flow of Intuit is 23. We are at the same valuation we were in May 2022. We are at the same valuation we were at in 2020, 2018. Look at this stock chart. This is the price to free cash flow of Intuit. Remember it. I will close the page and show you Adobe. The price to free cash flow of Adobe. No. Price to free cash flow of Adobe. Look at this. We have never seen this cheap valuation in 10 years. So Adobe is cheaper than Intuit. I believe these are two well-run businesses with fat margins, with the potential to implement AI everywhere and grow again nicely. But Adobe is cheaper than Intuit. What I want to say is, in this bloodbath, not everything is cheap. You still have companies that are expensive. You still have companies that are relatively expensive, a little bit expensive, or fairly valued. You have companies that are a little bit cheap, and you have companies that are cheap. I think Adobe is in the situation of being cheap right now. A price to free cash flow of 12 for a company that is growing 10% per year. People think that the business will die because of AI. I highly recommend you check other YouTube videos. My videos on Adobe are not the best. You have other videos that are way better, and you will learn great things only watching videos on YouTube, and you will give some conviction. Next point I want to show you is the death of price per seat. Now AI can automate everything, and all these subscription-based business models will evolve from the per seat recurring revenue to credits. And again, it's too early. And because it's too early, we have a big question mark when it comes to monetization. In 2026, I believe for all the software companies, they will show us to the public how they plan to monetize AI. And they will move from a per seat monetization to a per usage monetization, as Adam Khoo just said. And when they will explain their plan and when they will start to work, it will be too late. Okay. Efficiency versus cannibalization. Yeah, you have also some worries. Some people that say that AI will shrink margins for these businesses because companies will have to invest in their own AI and it will bring more costs. For some companies, it will be true. Margins will go down because of heavy AI investments. And for some companies, it is not true. For some companies, AI will improve margins because with AI, you can stop hiring. An example I have, a company that is not a software company, but it's an analytics company. It's MSCI. And MSCI is known for their index segment. MSCI is known for their analytics segment. And they talk about AI implementation. With AI, actually, they stopped hiring. They invest in-house. With AI, revenue is expected to reaccelerate because AI is creating more services, more products. And AI is lowering costs because for the job of 10 people, one guy can do everything with AI. So actually, MSCI stopped hiring very recently. I think they only hired like 2% more people. So if the costs are down and the revenue is accelerating, this is the kind of margins that you can expect. Look at this business model. Look at the operating margins over time. We are talking about an extremely well-run business model with improving margins. And for the past couple of years, the operating margins have gone up and they will continue to go up if you believe the management team. So actually, you have some businesses that will shrink costs thanks to AI. And again, you have to differentiate between businesses that will become more efficient because of AI or less efficient. And if you don't know, that's okay. Check other businesses. If it's too hard for you, that's okay. Check other businesses. Out of all the software companies, some will be losers, some will be winners, some will be too hard for you, too complex for you, some will be very simple ideas. Only invest in very simple ideas that you understand, okay? But for some companies, you will have cannibalization. Not everybody will survive. I don't want to make this video and I want you to think that all the software companies are great deals, everything will skyrocket. It's not true. Some software companies will die. Some software companies will be disrupted. Some software companies will have lower margins. Only a handful of companies will be great leaders of tomorrow. Only invest in companies that are winning. As always, winners keep on winning. If you have a fragile business model, it will not be good. It will not be good. You have agentic AI disruption everywhere. And actually, if AI agents are doing all the work, the whole ecosystem of a software, of an app, of a landing page will have to change. For example, I've seen 0 videos talking about this, by the way. How can I say it? Imagine you are a business, a subscription business model. How can you get customers? You have to make a beautiful website, a great landing page, so people can click very easily, very simply. You can get 2 weeks trial, 14 days risk-free guarantee. So you put people, you put trust in some people. People trust you. They try it out. They test your product, your service, and then after 2 weeks they are locked, and they just like your product and they pay. So you convert people from prospects, from leads to first-time buyers, free buyers, and then paid buyers. They test your product for free, and then they are convinced, they buy, and they stay. This is an ecosystem that will maybe be disrupted because now users of all the software companies will maybe no longer be humans. Maybe in the future, in the next 5 years, most users will be AI agents. I will have many agents. My agent for Adobe, my agent for Salesforce, my agent for this. So maybe you will have, it's almost for sure actually, many more agents in the future. And the user interface will have to completely change It will no longer be who has the best interface to lure customer, to convince customer, the pretty interface, the wonderful landing pages, the button that is wonderful. No, it will be who has the most accurate data, who has the best data in the fastest possible way. And AI agents have no pain in switching providers. For example, we are humans, we are sticking to what we know. This is part of us, actually. We are all humans. We are like to be in our comfort zone. So if we've been using the same service for 3 years, it will be a pain on the neck to just learn again how to use another software. So we stay in this software even if the price is going up. An AI agent will not think like this. If an AI agent has been using like a software for a couple of years and the price goes up, the AI agent will compare the prices of everything, the value for money for everything, and you will have a switching cost that will no longer be here. You have no switching cost whatsoever, no stickiness. So some businesses, some software companies will die because of this. You will no longer have stickiness because of laziness. AI agents will switch from one software to another software to another software to another software. You will have a commoditization of many software services. And it is bad. And for many companies, I will not name names, but for some companies, they are really in a bad shape. So for all the stocks you want to invest in for software right now, think of customer experience. You are no longer talking about humans and how beautiful your website is, your landing page is, how easy it is to use your stuff for humans, for the human's eyes. But now customers, and in the future, customers will be AI agents. What is important for them? Proprietary data, usefulness, price, effectiveness, how fast you can get the data and how accurate it is to use the data. Two different experiences. So many websites will have to change. Many websites for individuals, for businesses, many websites will have to change. For browsing, for SEO, for booking a flight, all the websites will have to change actually. It will be a huge change. And I've seen 0 videos on YouTube talking about this. The ecosystem, the user experience is changing, and it is changing fast. But what is great is now that you know this, and you can see for all the software stocks you are following, if they are changing, improving, if they are embracing this new world led by AI agent. And I want to talk about another tweet from Daniel Pronk. Is software truly doomed? My thoughts on the continued software sell-off. I think he's sharing a lot of great points that I wanted to share with you today because he has been investing in stocks for many years. I mean, he knows this very well and covering software stocks. He is an investor in Constellation Software and he is buying the dip for Constellation Software. So here is what he has to say with the world. 1, I don't think anyone knows truly what the software landscape will look like in 10 years. There is more uncertainty and risk in this space as a whole. 2, software stocks were selling for an all-time high multiples right before AI fears began. I think it's really true. The starting point for valuations was really high. So it's not that all these stocks are getting demolished for no reasons. It's that these stocks, these software stocks, had a moat, so they deserved a premium valuation. So you go down a lot, you are not cheap, you are just back to fair value. They were priced for perfection and absolute certainty. It's clear that AI is rapidly improving and making writing code more of a commodity. Building software and features is getting cheaper and more rapid. Wonderful. 4, almost every software stock deserves to be down due to the increased risk, which again wasn't priced in at all. We were in a scenario where these stocks were priced for perfection, recurring business model, high retention rate, to now priced for apocalypse. So It's a huge re-rating. You look at all the software companies, the multiples got cut in half. However, not every software business will be disrupted. Software that is easy to replace, think purchase over the internet with many alternatives that you can switch to immediately, will be most at risk. This is because the softwares are mostly UI layers on top of publicity or easily available data. For all the cheap websites, they will be disrupted. All the cheap software services, they will be disrupted. The companies that own their own data, like MSCI, for example. MSCI is a company with decades of private data. Gemini, Claude, they can't have access to this data. MSCI can just integrate AI to have access to their private data, proprietary data, and it will work. If your company doesn't have a private data system, maybe you can be disrupted. MSCI is in a very good shape when it comes to AI because they have their own data, private data. If the companies that have their own data have long sales cycles and are deeply integrated within a business day-to-day operations, will be more immune to disruption and competition. If you replicated this type of software one at a cheaper price, I'm still not convinced customers would switch due to operational risks. Many customers value reliability over everything. This is what we said about Intuit. Will you really create your own app to have your tax filings, your tax reports? Or will you trust Intuit because you've been using Intuit for so many years? Like TurboTax or these kind of things. Considering their businesses rely on these softwares to operate. 7. I don't see many people discussing how existing softwares can also benefit from AI by leveraging their proprietary data to build existing customers new features and products. Exactly what MSCI is saying to us investors. I'm a shareholder of MSCI. I'm a proud shareholder of MSCI. The CEO is exactly saying this. AI is accelerating revenue because it is creating new services. And AI is improving margins because you don't need to hire anymore. Organic growth could accelerate if this is the case. You can see and monitor for all the software companies in 2026. If this is the case, it will be a key differentiator between companies that are being disrupted and companies that are integrating AI everywhere. Check if the organic growth is reaccelerating. 8. Existing softwares also benefit from increased efficiency and could see margin expansion if they integrate and use AI in workflows. I don't think incumbents like Constellation Software are sitting around waiting to be disrupted. They have an army of engineers working with AI and sharing lessons across the entire organization. By the way, Constellation Software is a company, a serial acquirer. They acquire all the niche software companies. If the whole software industry is getting cheaper, guess who will benefit? Constellation Software will buy them out at a cheap price, at a discount. So actually, AI is a very good thing for Constellation Software because they always wanted to buy software stocks. And now the value of all the software stocks are going down. All the private companies, the market value is going down. So who will buy them at a discount? Constellation Software. Maybe it's a great thing for Constellation Software. They will have great buying opportunities now that everything is down. TLDR, there is more uncertainty and risk, which I believe justified a multiple contraction, but I also believe the fears of AI-generated software disrupting and not benefiting existing companies is a bit overblown. There is a good chance that AI could be a tailwind instead of a headwind for many businesses. And I share this view. You will have some companies that will lose and be disrupted. And you will have some companies that will implement AI and win. So you have a couple of things to monitor in 2026. Who is reaccelerating their revenue? Who is having a clear action plan how to monetize AI? Who is clearly monetizing AI and improving their margins? Who is investing in-house? Who is hiring or who has stopped hiring and just using AI everywhere? Who is thinking for customers that are humans and customers that are AI agents? These are all the things that I will monitor for software companies. I think it's a very interesting topic. You have a whole industry that is beaten down, all the stocks are down, and I believe this is a very good hunting ground if you know what you're doing. If you like this content and you want to go deeper, I have a coaching program. In this program, you will learn the strategy I use to outperform the market. You will learn how to find winning opportunities. You will learn how to properly value stocks, when to buy, when to sell, so that you can build a strong portfolio with great companies. Additionally, inside the program, you will have access to an exclusive community of like-minded investors, and you will also have access to my personalized guidance to reach your investing goals. Click the first link in the description to get more information. You will get a short video that explains how everything works, completely for free. No need for your email address, just click the first link in the description and I'll see you on the other side.